in the United States has hit 4-decade highs. Lower-income households face the worst of the crisis.
In May, inflation hit 8.6%, the highest in 40 years.
That spells danger for the economy as a whole. Little wonder, perhaps, that even as they fret about higher inflation,
inflation has been a hot topic in the news lately, with rising prices affecting everything from groceries to gas prices. As consumers, we feel the pinch of inflation in our wallets. But have you ever wondered how inflation impacts the economy as a whole? In this video, we'll explore the recent developments in inflation, including the latest figures for March 2023, and discuss the challenges faced by central bankers in managing inflation and balancing economic growth. We'll also look at the potential impacts of inflation on businesses and consumers and explore the policy responses that governments and central banks may take to address the issue. So let's dive in.
4 decades after its creation, Silicon Valley Bank was the 16th largest bank in the U.S. It took just a day and a half for it to fall apart.
A rough week for the banking industry.
The collapse of Silicon Valley Bank. It's the second biggest bank collapse in U.S. history.
Inflation is a hot topic in the world of finance, and recent developments have put central bankers under the spotlight. In March 2023, inflation in the United States dropped to 5%, the lowest in almost 2 years, providing some relief to central bankers grappling with high inflation rates in recent months. The decrease in energy prices, stable food prices, and a slowdown in the cost of used cars and trucks contributed to the easing of inflationary pressures. However, the continued rise in housing costs, with an increase of 0.6% in March and more than 8% year over year, is a cause for concern and may impact the core consumer price index. Central bankers face a challenging task of managing inflation and balancing economic growth. The recent rise in inflation has posed significant challenges, and central banks have been implementing various monetary policy tools to address the issue. While the decrease in inflation in March 2023 may be seen as a positive sign, there is still a need for continued vigilance to ensure that inflation remains under control and does not derail economic recovery efforts. This complex nature of monetary policy and the challenges faced by central bankers in managing inflation and economic growth highlight the importance of monitoring inflation trends closely and implementing appropriate policy measures to maintain price stability while supporting sustainable economic growth. The Federal Reserve has been closely monitoring inflation as it has remained persistently high in recent months. The central bank has taken a hawkish stance, signaling its commitment to combating inflation and considering tightening monetary policy to rein in rising prices. However, managing inflation is a delicate balancing act for central banks. Tightening monetary policy too aggressively could risk stalling economic growth and harming the recovery from the pandemic-induced recession. On the other hand, not taking sufficient action to address inflation could result in higher inflation expectations and a prolonged period of elevated inflation, which could erode purchasing power and negatively impact households and businesses. The recent decline in inflation in March 2023 to 5% below market forecasts could provide some respite for policymakers, but it is still significantly above the Federal Reserve's target of 2%. It remains to be seen how the central bank will navigate the challenging inflation environment and strike the right balance between addressing inflationary pressures and supporting economic growth. Central banks around the world have been employing various tools and measures to address inflationary pressures and maintain price stability. In addition to the US, many other countries have also been grappling with elevated inflation levels in recent years. The impact of global events, such as Russia's invasion of Ukraine, can also have spillover effects on inflation in other countries, especially through commodity prices and supply chain disruptions. Looking forward, central banks may continue to monitor a variety of factors that could impact inflation in the coming months. These factors may include changes in consumer spending patterns, shifts in global commodity prices, labor market dynamics, and supply chain disruptions. Additionally, the effectiveness of monetary policy tools, such as interest rate hikes or changes in asset purchases, in addressing inflation will also be closely observed. In response to the persistent inflationary pressures, governments and policymakers may also take additional measures to address the root causes of inflation. This could include implementing structural reforms to enhance productivity, investing in infrastructure to alleviate supply bottlenecks, and addressing issues related to labor market participation and wage dynamics. Businesses and consumers may also need to adapt to the changing inflationary environment. Business businesses may face higher input costs, such as labor and raw materials, which could impact their pricing strategies and profit margins. Consumers may experience changes in their purchasing power and may need to adjust their spending and saving behaviors accordingly. It's worth noting that inflation can have differential impacts on different groups of people. Vulnerable populations, such as low-income households, may be disproportionately affected by rising prices as they spend a larger share of their as the situation continues to evolve. Policymakers and stakeholders will need to remain vigilant and adaptive in their approach to ensure price stability and support sustainable economic growth. One potential risk that may arise is the possibility of inflation expectations becoming unanchored, leading to a self-fulfilling cycle of rising prices. Central banks may need to communicate effectively with the public and provide clear guidance on their inflation targets and policy actions to maintain credibility and anchor expectations. Furthermore, inflation can also have significant implications for investors and financial markets. Inflation erodes the purchasing power of money over time, which means that investors need to earn a higher rate of return to maintain their wealth. This can lead to higher interest rates, which can negatively impact stock prices and other risky assets. However, certain assets, such as commodities, real estate, and inflation-linked bonds, may provide some protection against inflation. As a result, investors may need to adjust their portfolios to account for the changing inflation environment. This may include diversifying their investments across different asset classes and geographies, incorporating inflation-protected securities, and considering alternative investments such as real assets or private equity. In summary, managing inflation in the current economic environment presents significant challenges for policymakers, businesses, consumers, and investors. While the recent decline in inflation in March 2023 may provide some respite, there is still a need for continued vigilance to ensure that inflation remains under control and does not derail economic recovery efforts. Policymakers may need to consider a range of policy tools, including interest rate hikes and asset purchase tapering, to address inflationary pressures while supporting economic growth. At the same time, businesses, consumers, and investors may need to adapt to the changing inflation environment and take proactive steps to manage its impact on their finances. The recent developments in inflation highlight the complexity of monetary policy and the challenges faced by central bankers in managing inflation and economic growth. The focus will likely remain on monitoring inflation trends closely and implementing appropriate policy measures to maintain price stability while supporting sustainable economic growth. As the situation continues to evolve, policymakers and stakeholders will need to remain vigilant and adaptive in their approach to ensure price stability and support sustainable economic growth. Thank you for watching, and I hope you found this video informative. If you have any questions or comments, please feel free to leave them down below, and I'll do my best to respond. Don't forget to like and subscribe for more videos on economics and finance. See you in the next one.